talking about bank or Nifty Bank, that one has scaled a fresh new record high level in today's trading session as well.
Well, yes, Cheryl, and just yesterday, almost a 1,200 points gain coming in for the banking index. And like you were mentioning, that ITs were taking the back seat. But how are the banking majors performed in contrast to the IT bellwethers? And what should one expect from the banks after their outperformance in the earnings season as well? Let's revisit Nikunj Dalmia's editor-in-chief, ET Now's take on this one.
From a market standpoint, IT is crucial. IT is important, but it is not relevant right now.
Yeah.
Banks is where the earning momentum is there. And just look at the banks. I mean, you take some casualties aside, like Kotak Mahindra Bank, which is a case-specific issue, HDFC Bank, where they're moderating growth. But you just take these two names aside. I mean, the two sumos outside, the rest of the banks have delivered, whether it is IndusInd Bank or whether it is ICICI Bank or whether it is smaller NBFCs or Axis Bank. So markets are telling you that, look, lenders are doing okay. If lenders are growing without NPAs, that means economy is doing well. Liquidity is coming back. Inflation fear is behind us. So time to go back to lenders right now. And I think that is a trade which could be a trade for next couple of days. We were hunting for leadership based on yesterday's price action. Will the leadership come back in lenders? Because that's a large sector.
Yeah.
That's 35% of the weightage. You take out Kotak, you take out HDFC Bank, it is still a very handsome representation. And I also feel that for HDFC Bank and Kotak also, the collateral damage has been huge. I mean, how much more can they fall? It is not that they are not growing. Markets will readjust the growth. See, the underperformance in HDFC Bank is getting checked. The price action in Kotak Mahindra Bank, it just could linger there. They are not the heroes right now, let me put it this way. They are the backbenchers. But if you're the backbencher, that does not mean that you will fail the test or you will be kicked out of the class. You're still part of the class. You're still part of this 2021 bull market class.
All right, so that's the view coming in from Nikunj Dalmia, who's the editor-in-chief of ET Now as well as ET Now Swadesh, on the entire discourse about what's exactly happening in the banking space as well as the IT space, or either Nifty Bank versus Nifty IT index. But which side of the market should you actually bend towards? Is it the IT sector or it is the banking space, given the fact that the IT sector is taking a sort of pullback, and you have the Nifty Bank that's always been the sectoral leader? So let's put that question to our experts today. You have Rajesh Agarwal as well as Kush Bohra joining us on the show. A very good morning to you, Rajesh, as well as Kush. Thank you so much for joining us on ET Now. And Rajesh, a multi-million-dollar question, isn't it? Which side of the fence should you go, should you lean towards? Is it the banking index or is the IT index? When you talk about Nifty Bank, everyone only talks about HDFC Bank, saying it's a formidable player. Forget about the fact that the stock is not doing much, but in the longer run, that will be a winner. And given the fact that it has a huge weightage on the Nifty Bank, isn't it? But what, according to you, should one do? Should they tilt towards IT index as well, given the fact that most of the majors have taken it easy, but they are big players in the global market as well?
Good morning, Cheryl. Good morning, Srishti. Good morning, Kush. That's $1 million question, no doubt on that, because both of the sectors have been doing well. And we as a house believe that going forward also, they would be doing well, despite the fact that IT is not performing at this point of time. We have seen for the first time in history, I believe I'm not wrong, that first time in the history, we have seen the three majors cutting down their headcounts by almost on an aggregate of 64,000. That was surprising. But we should not forget the fact that attrition rate has gone down. The balance sheets are strong. These biggies come out with buyback almost every year. They dole out good dividend. They have cash on their balance sheets. And the deal wins have been quite good, I would say. It's the only, they are waiting for only a trigger of a rate cut in the US, where we will find that discretionary spends going up. So again, they would be in the ring, I would say. So somebody looking for a long haul, maybe 1 or 18 months, 24 months down the line, I think IT can be one of the constituents of your portfolio, only in the large cap space, I would say, at this point of time, because they are comfortable on valuation front when you compare to the second rung or the third rung of the IT stocks. So I would go ahead with Infosys or a TCS for a medium to long term horizon. But as far as banks are concerned, I think the worst has gone behind. NIMs has bottomed out. and they are just waiting for a lower interest rate regime to happen in the near future, which would help not only NIMs to go up, but even credit offtake to go up. Large cap are highly undervalued, as Nikunj just pointed out that two sumos, although they are sumos, they are backbenchers, but they are not out of the game. They are still inside the game, and with the kind of size IDFC has grown up after the merger, I think it's one of the 5 largest bank across the world, going to report around 80,000 odd crores of profit in the next year. It's highly undervalued. Somebody looking for a longer-term horizon, one can go long on HDFC Bank and Kotak Bank too, which after the news of 2 days back of RBI putting restriction has gone down on valuation parameters to historical low levels of price to book. I think these two sumos are highly undervalued and can be considered for a long-term portfolio. Apart from this, on the PSU side, they are going to do well. When we talk of economy going to 5 trillion and 10 trillion, we cannot leave banks behind. Banks are going to do well, and we should include even NBFCs to the entire spectrum. So in the second run PSU basket, we have seen Bank of Maharashtra giving stellar numbers from the last 4-5 quarters. So that would one of our picks too.
All right, those are the top recommendations from the large cap space, and apart from that, Bank of Maharashtra continues to be one of the favorites for Rajesh. But Kush, coming to you, looking at the price action, what's your take on IT versus banks, given the move and the momentum that we are seeing in the banking stocks? Which one will be your top favorites at this point?
Hi, Srishti. Hi, Rajesh. Hello, Cheryl. Well, I think if you look at the weekly setup for, let's say, Nifty IT, if you draw a channel, then the Nifty IT index is right now actually at the lower band of that channel. So there is, very clearly pressure, and it is likely to continue. So if the index does break those, 33,300 odd levels, then it could slip further down. Now, if you compare the same for Nifty Bank, then it's the exact opposite. Now, Nifty Bank is actually in an upward sloping channel, and then there's a very clear possibility that while 50,000 is a very psychologically critical mark, I think 52,000 is the number that we should look at for Bank Nifty. So the momentum is very clear. Also, I think the secret lies in the details. So if you look at the outlook for the stocks, the biggest stock in the banking space, HDFC, the outlook now is getting optimistic. Whereas what happened for the IT space is exactly opposite. Initially, it wasn't the big names, the TCS, Wipros, and Infosys and HCL Tech of the world that were getting limelight. There, it was the mid-cap space, which was Coforge, Persistent, DSOT, and the likes of those. Now, even those are starting to come under pressure. So I think perhaps IT, at least for the big names, could be something that you want to hold on to from a risk-reward perspective. I agree with Rajesh from a medium to a long-term perspective. Perhaps holding on to IT stocks, or perhaps even a fresh entry from here might make some sense. But if you're a trader from a momentum perspective, it's very clear that the banking stock and the banking space is the way to be. All in all, stick with the banking names. I think the debate here is between what is going to do more, the large ones or the small ones, the PSUs or the private. So I think the Nifty Bank momentum play is likely to continue. 50,000 more of a psychological mark. I think 52,000 is the next level that Nifty Bank is gearing up for.
That's a take coming in from both of our experts on where the leadership lies in the market at this point in time, banks versus IT.
If you like this video, then like, share and subscribe to ET Now.